Welcome to Profit Forex Academy. My name is Emmanuel. We are going to be talking about TDI. I'm going to be explaining everything about TDI so that you know how to use them and how to profit in the forex market with them. Now, TDI is one of the indicators that forex traders use to trade the market or to get signal or the direction of the market. TDI means traders dynamic index. So TDI is a particular type of indicator that the forex traders use to know when to enter the market or when to leave the market, or what the market is about to do. It helps them to determine when and how to trade. However, you cannot just use the TDI, you have to know other things. There are other things to look out for before you can be able to use the TDI successfully. So today I'm going to be explaining everything that TDI helps you to do. So one of the basic functions of the TDI, there are three major functions or three things you should look out in TDI for you to use them properly. One of them is crossover. The next one is shark fin, and then the divergent. Or you call it divergence. So these are the major things that the TDIs helps you to do. You use crossover, the shark fins, or the divergent. Crossover helps you to know when to enter the market. Shark fin helps you to know when to leave the market, and then divergent helps you to know when the direction of the market is about to change. Please, if this video is interesting, please subscribe and then share the video, and also hit the notification button to get more videos as we release them. So if you stick to this video, I'm going to be explaining all these things in details, and then how to use them and how it's going to make you profitable in the market. So let's go. Now I'm going to go to my chart right now. So this right here, this is TDI. All these things here is the TDI. So the things that make up the TDI, this is the Bollinger Band. The Bollinger Band is the first thing that make up the TDI. Then let me zoom in a bit. Excuse me. Let me zoom in a bit. So this is the Bollinger Band, and then you have the market baseline. The yellow line is the MBL. The yellow line is the MBL, that is the market baseline. And then you have the signal line. You have the signal line. The green line is the signal line. Look at the green line. This is the signal line. Signal line. And then you have the red line, which is the price line. I call it the price action. The price line. So these are the major parts of the TDI, and these right here, if you know how to use them very well, you excel in forex market very well. So first of all, I told you that the TDI, one of the things it helps you do is you know when to enter the market using the crossover. Now, what is crossover? Crossover simply means when the signal line excuse me, when the signal line, which is the green line, crosses over the price line or the price chart line, which is the red line. So when the green line crosses over the red line, it can signify that it is your entry position. Now don't get it wrong. If you must use this TDI, you should have been able to do your analysis and probably know where the market the price direction is going to, so that you don't make the mistake of entering wrongly. Now excuse me. So look at it now. When you have done your analysis, for example, you have done the analysis and you know that this particular point here, that this is a level 1 and the market is going to go down. Now you now need your entry position. So what do? You can use your TDI to get your entry position. How do you do it? When you come up here, now this is where we are at. This is your level 1 for D1. Now look at the TDI. Look at the TDI right here. From this position, which should be your entry position, look at what happened. The TDI was about going up and then it turned down and crossed over that green line, that red line. So basically you are looking at when the TDI crosses over the red line, which is the price line, or when the TDI crosses the MBL. This is the MBL, the market baseline. So if the TDI crosses over any of these, you'll be sure that your market is going your way. But the perfect entry is when the TDI crosses over the price line, which is the red line. Now if for example you want to enter your position here, now what happened? Let me show you what happened. Look at this point here. At this point here, you see the crossover here. There's a crossover around here, which simply indicates that it is a perfect entry position. Remember, I said that you must have done your analysis very well and be sure that you have the right direction. It's now left for you to get your perfect entry. So that is one of the things the TDI will help you do. It help you find your perfect entry position. Now you are looking for crossovers in your TDI. Look at another point where crossover happened. Look at this point. Look at this point. Look at this point. A slight crossover happened here, but you know that if you have done a BTMM analysis, you know that the market is not ready to move yet. So this crossover will not hold because the market have not completed a movement strategy or a movement position. You need a double shoulder for you to know that the market is about to move. So I'm going to talk about that later, but not in this video. So but look at this point here where the market is ready to move, and then look at your crossover here. It's crossed over here to show you that yes, the market is ready to move. And then what happened? It moved and then it gave a shark fin. We are going to come to the shark fin later. Now look at another crossover. Let me clean this. Now look at another crossover, and you see the crossover around here. all this crossover is showing you that the market is going to move to a particular direction after you have done your analysis. And look at that same crossover here, this crossover. Look at the crossover here, showing you that the market has continued, is about to continue going down. So basically, this is what you look out for in your forex market or your TDI. You look out for crossovers to be sure that the market is ready to move. Now look at what happened here. Look at this crossover here, and then when you check them, you see that. Look at that crossover. You're seeing it. This is a perfect entry position, but remember, you should know your time frame and how to use them. I'm just showing you this with a D1 time frame. If you are actually going to enter the market, you should use the 15 minutes time frame to do your analysis, or you use your H4 depending on the type of trader you are anyway. So now this is another in H1 rather. Look at this point here. Look at this point, and then look at the crossover that already happened, telling you that yes, the market is ready to move. And then the market actually moved to this point before going up, turning back and going up again. Now how do you know that this market is ready to go up? Look at the shark fin here. We are going to explain that in details later. So please, if this video is good, please subscribe and then share this button, and also click on the notification button, and then you'll be able to get our videos anytime we release them. So there are plenty crossovers, and then there are plenty entries. This is a crossover, but this crossover didn't hold. Why? Because the market is still going up, so you have to also analyze your trade before looking at the TDI. Sometimes crossover cannot hold because the market is still in a particular direction. If the market is going in an uptrend, like this market is in an uptrend, this downward crossover could mean that the market is completing a leg to continue going up. I will explain that in my later video. So please subscribe to this channel and you will get my other analysis about BTMM. So this is all you need to know about crossing over in TDI. When the green line, which is the signal line, crosses over the red line, which is the price line, you know that the market is going to go in that particular direction. So that is for crossover. And now we're going to be talking about the shark fin. Yes, we're talking about shark fin. Now shark fin, just like the shark that's used to pop out from the water when it is swimming, and then you see the fin outside the water. That is the same thing we are talking about in this shark fin or TDI shark fin, where the signal line pops out from the Bollinger Band. When the signal line is out of the Bollinger Band, normal scenario, when the market is moving, it continues to move inside this Bollinger line, inside the Bollinger Band, these two Bollinger Band. This is the perfect place where the market should be moving in that particular direction. But if it pops out up or down, you know that it has either oversold or overbought. If the signal line pops out in the upward direction of the Bollinger Band, it simply means that the market may have oversold, overbought, sorry, that the market have overbought and it is about to come down. And if it pops out in the downward direction, it may signal that the market has oversold and is about to buy. So it is as simple as that. Whenever you see a signal line, this green line, popping out from the Bollinger Band, it means that it has either oversold or overbought. So that is what we mean by shark fin. Look at some of the shark fins here, look at them here, look at another one under here, look at plenty of them, telling you that it has either oversold or overbought. Now remember what I told you, before you use any of this, you cannot just use one of them, like using the TDI solely on its own without other method or other strategies, because one is not enough. Remember I told you, you have to be sure of your analysis and then know what to expect before you look at the TDI. For example, look at what happened here. This is a little buying of the market, and then another little buying of the market, but here there is a shark fin showing you that the market has oversold, overbought, and then you thought the market to come down, but it continued to go up. This happened because this market has just done a reset. This market has just done a reset, so it's still an upward trend, but it's just done a reset. So like I said, I'm going to be talking about BTMM cycle analysis in my later video, so just subscribe and then you watch it later. So if you know the counting of levels in BTMM, you understand why this, even though this market has oversold or overbought in the TDI, it still went in another direction. So but basically, when you see a shark fin, know that it has either oversold or overbought in the market. Now let's look at some of the shark fins that is remarkable in this chart, and look at this. The market continued to buy until it gets this point, and then look at the shark fin here. The market has popped out of the Bollinger Band, which signifies that this market is ready to come down, and voila, the market came down crashing. Now look at another, let's check for more shark fins. There should be plenty of shark fins. Now look at another shark fin here. That's another shark fin. This market have been buying and buying and buying, and then this thing happened here. This shark fin happened here, and the market came down crashing. Look at another one. This market have been buying to this point, and then a shark fin happened, showing you that the market needs to retest a bit, and it actually retested before going up again. So these are the things you should look out for when you are using the TDI. The shark fin, look at plenty of it here. Look at another one, look at another shark fin, showing you that the market needs to retest or reset here. And look at what happened. It came down and then before going up again, and it happened again here. Look at it here, shark fin everywhere, showing you that the market needs to retest or reset and then before going up again. So these are the things you need to look out for when you are dealing with TDI. And then look at another shark fin here, look at another shark fin here, and look at what happened here. Came down and did a shark fin and then move up again. So that is basically the things you need to know about shark fin. And then the last one of them is the divergent. Now what is divergent? In a normal day, when you are analyzing your market and you see a pattern like this, you see a pattern like this, you see a pattern like this, but in your TDI you are seeing something different. For example, in this particular pattern, instead of you seeing your TDI printing the same thing, your TDI is printing something different. Now look at, let's try and see if there is any. Let me show you better. A divergent. Now look at divergent here. And remember I told you that divergent helps you to know when the market direction is about to change. Now look at this particular divergent. Now this should be a straight line. Let me use the trend line to show you what I mean. Let me use it. Look at a straight line here, but when you come to your TDI, you see something different. Now instead of the signal line in your TDI printing a perfect straight line like the price chart printed, it's printed a diverged line, an angle line, something like, instead of going straight, it goes up. Now look at the divergence we are talking about. So things like this is the divergence we are talking about. When the TDI is printing a different pattern from what the price chart is printing, it is called divergent, and it signals, it helps you to know that the price movement is about to change. It's as simple as that. It helps you to know that the price signal or the price direction is about to change. Now remember I told you. Now look at another one. Let's check for more. Now look at another divergent. You have a pattern going up, but in your TDI the pattern is going down. Are you seeing it? Instead of printing an upward angle just like the price chart have printed, it's printed a downward angle, but the price chart is going up. So this is another example of divergent. And remember I told you it helps you to know when the price chart, the price direction is going to change. And look at what happened. It changed and starts coming down. It was going up, but it turned around and starts coming down. So this is the divergence we are talking about. Let's look for more divergence. If you are going to see more, there should be plenty of them. Should be plenty of divergence around here. Now look at another divergence. Look at, printed a straight line here. The price line have printed a straight line, but in your TDI it has printed a downward line. So basically you come to the 2 points. This is point A and this is point B, and then it has a straight line, but in your TDI it have a downward trend. So it shows that this market have been going up, but eventually it's going to start coming down. So, and look at what happened. It just crashed, coming and start crashing down. Now look at another TDI. Look at another divergent here. This one is very clear. The market printed a somewhat downward or a straight path, but in your TDI it printed something different and it's going up. So these are what TDI is all about. and then these are simply how to use them. The divergence helps you to know the change in direction, or anticipate change in direction of the price, and then the crossover helps you to know when to enter the market, the perfect point for you to enter the market. And then the last one, which is a shark fin, helps you to know when the market has oversold, and then when to leave the market, or when the market has overbought, and then when to leave the market. So simply, this is what TDI is all about, and there are many other things that you can use it for, but these are the basic three, and if you understand this and know this, you'll be able to excel with them in forex trading. Thank you guys. Please, if this video is interesting and you like it, please subscribe to this channel, and then share the video, and also click on like button and then notification button. Thank you guys.